Brent crude just exploded nearly 7%, above $100, after Houthi rebels attacked 2 Saudi tankers in the Red Sea. This is no ordinary spike. Here's the danger. $101.16 is the daily resistance where stop hunts live. RSI is overbought, but ADX is at 57. This is trend power, not exhaustion. If you want the scalping trigger above $101.20 and the buy the dip swing at $98.50, the full blueprint is live. You might watch my video yesterday, which mentioned clearly that Brent oil would surge to $100 that we open with silence, then a single, urgent statement. Right now, Brent crude is at $100.64, up 6.97%, a move that hasn't just broken a psychological level, it has ripped a hole in the global supply map. And here is what most traders do not see. There is one danger zone and one hidden opportunity right now. I'll show you both. If you only watch the first 60 seconds, you will walk away with the exact number that separates a blow-off top from the next explosive leg higher. Stay to the end because I am giving you 2 scalp plays and 1 swing trade you can execute today, plus the one headline that flips everything, the Core PCE data. Now, instant market verdict. Session bias, trending, with serious breakout momentum. But we are not blindly chasing this spike. The single invalidation level that flips the entire bullish structure is $96.20. Write this number down. If Brent closes a daily candle below 96.20, the entire multi-week breakout resets and we could see a fast unwind back toward the $92 region. That is the line in the sand. Right now, the herd is positioned exactly where you'd expect. Retail is euphoric, jumping in late above $100. While the smart money is watching a massive stop cluster that sits just above the round number. The real liquidity pool rests between $101.16 and $102, where last night's option strike wall and fresh stop entry orders are piling up. A report from this morning's institutional flow desk flagged a huge open interest build at the $102 call strike. That's the magnet. So we have a surge driven by genuine supply panic, but also a mechanical pull toward a gamma flip zone that will trigger violent two-way action. Let's go into the technical deep dive, because the chart is screaming something most traders miss. I am starting on the weekly time frame. Brent has violently reclaimed the entire range that held for months between $85 and $95. The moving averages tell a story of extreme dislocation. The 20-period MA sits way down at 85.40, the 50 MA at 86.85, the 100 MA at 86.63, and the 200 MA at 83.02. Price is so far above all these averages that the momentum gap itself becomes a gravitational force. Eventually a mean reversion will come, but in the short term, this is trend power at its most dangerous. The weekly ADX is 57.96, one of the highest readings this year, confirming a roaring trend, not a topping signal. The weekly MACD histogram is expanding, and the signal line is pointed nearly vertical. This is a structure where pullbacks get bought aggressively until something fundamental cracks, drop to the daily. Brent printed a monstrous green candle that swallowed 6 days of consolidation. The daily RSI is at 75.88. Overbought, yes, but in a geopolitical melt-up, overbought can stay overbought for days, especially when ADX is this high. What I am watching closely is a potential hidden bearish divergence on the hourly RSI, which is not yet confirmed. If price pushes toward 101.16 and the hourly RSI makes a lower high, that would be your first exhaustion warning. The MACD on the daily is at 2.23 and accelerating. There is no cross-down signal anywhere nearby. The stochastics, however, are at 62, which is still below the extreme zone, giving room for further upside before a natural cooling. Now the key levels you must tattoo on your screen. Resistance layers. The immediate hurdle is the pivot-derived daily resistance at 95.32, but that is now support flipped, ignore it for today. The fresh resistance that matters is 96.34, then the sharp level at 98, and most critically the 101.16 area, which aligns with yesterday's liquidity gap and this morning's analyst note flagging technical exhaustion near $101.16. Above that, the measured move target from the breakout sits between $102.50 and $104, which matches the call option wall. Support layers have moved up. The first intraday cushion is 92, then 91, then 89.35. But with price at $100, those are miles away. The 50-period MA on the 4-hour chart, which was support for the entire rally, is now just below $94 and climbing fast. That's your dynamic invalidation line on the 4-hour time frame. Here's what most traders miss. The true engine of this move is not just the Houthi attack, it's the cross-asset linkage screaming inflation. I'm looking at the US 10-year yield ripping to 4.71%, a level that has not been seen since 2025. That yield spike is oil-induced stagflation fear, rising energy costs fanning the flames of core inflation just as the Fed was hoping to pause. The interest rate market has now repriced to a 78% probability of a Fed hike, up from 20% just 3 days ago. The DXY is hanging near 101.4. If it starts breaking higher on this risk-off bond move, that dollar strength will eventually put a lid on oil's dollar-denominated rally. However, right now, the VIX structure and equity weakness show a classic demand-side anxiety, but for oil it is purely a supply panic. So we have a tug of war, a supply shock that wants oil higher, and a tightening financial condition that wants to cap it. That collision point is exactly where we find our scalp entries. Let's build the fundamental narrative web, because the next 24 hours tie it all together. In the last day, Yemen's Iran-backed Houthi rebels launched attacks on 2 Saudi oil tankers in the Red Sea, effectively attempting to enforce a shipping blockade. That opens a second critical maritime choke point alongside the near standstill at the Strait of Hormuz. On top of that, President Trump threatened Iran with major military punishment, and credible reports say the US is considering a massive attack if shipping strikes continue. This is not posturing, it's a direct supply disruption event. Meanwhile, Kazakhstan suspended crude exports through the Caspian pipeline terminal following drone strikes, and Indian refiners have halted Iraqi loadings due to transit hazards. This is a compound supply shock, the likes of which we haven't seen since the early 2020s. The market is pricing a risk premium that could last weeks, not days. Now, the 1 to 2 week directional lean remains bullish while we hold above 96.20. The invalidation event is a daily close below that level, or a sudden diplomatic breakthrough, an announced ceasefire, which would collapse the premium. But there's a wildcard arriving today, the US Core PCE price index. This is the Fed's preferred inflation gauge. If it prints hot, the inflation fear merges with oil supply panic, and yields could spike again, potentially triggering a liquidity event in equities that spills into commodities. Alternatively, a soft PCE number could cool the dollar and let oil run even faster. I'm tracking consensus right now. Do you think oil hits $104 this week? Comment yes or no right now. I'm pinning the best real-time call. Now we enter the money section. Most people skip this part. That's exactly where the money is made. Keep watching. I'm giving you 2 scalping strategies and 1 session swing, each with exact price triggers, stops, and risk-reward logic. We start with the opening scalp, strategy 1, the opening scalp. This is a high-probability, momentum continuation trade designed for the 15-minute chart right at the start of a new leg. The market has just surged through $100 and is consolidating. We want a definitive breakout above the intraday noise level. Our trigger is a 5-minute candle closing above $101.20. That level clears the immediate chop and confirms that the stop hunt above 101.16 is underway. If you see that 5-minute close with strong volume, you enter long immediately. Your stop loss is tight, $100.70, just below the previous 5-minute swing. Low and the psychological magnet that will attract weak longs. This gives you a risk of about 50 cents, or 50 ticks. Take profit 1 is at $101.90, capturing the first wave toward the liquidity pool, offering a 1 to 1.5 reward right away. If momentum extends, Take profit 2 stands at $102.40, right before the major option wall where profit-taking will intensify. This scalp is immediately void if the 5-minute candle closes back below $100.50 before you are filled. That signals absorption, not breakout. On your screen right now, the overlay shows the exact numbers. The opening SCALP entry, 101.20, 5-minute candle close above, stop loss, 100.70 take profit 1, 101.90 take profit 2, 102.40 risk reward, 1 minute and 1.4 seconds to TP1, 1 minute and 2.4 seconds extended invalidation. Void if 5M candle closes below 100.50 before entry. Now, the second scalp is a counter noise specialist, and it plays the exact opposite psychology, the liquidity grab. This one is for the 15-minute chart and requires fast execution. The pattern I'm stalking is a fake breakout above the 101.16 daily resistance, the level that every technician is watching. When price spikes through that level, it will trigger a wave of breakout by orders and stop losses from early shorts. The smart money knows that pool of liquidity is sitting just above 101.16, likely up to 101.50 or 101.60. The trap is simple. A sharp wick above 101.16 that immediately reverses, indicating absorption and exhaustion. The confirmation comes when a 15-minute candle closes back below $101. That's your short entry trigger. Sell at market as soon as that candle completes, with an entry around $100.80 assuming some slippage. Your stop loss sits at $101.55, just above the likely wick high, protecting against a continued breakout. That's a risk of 75 ticks. Your take profit is a single, fast target at $99.80, right at the nearest intraday liquidity pool and the session VWAP that will act as a magnet. That's a 1 to 1.3 risk reward, but with high probability if the grab occurs. Warning: this trade requires fast execution and a calm mind. If you hesitate, do not take it. The invalidation is simple. If a 15-minute candle body closes above 101.50, the grab has failed, and you stand aside. On-screen trade card now the liquidity grab entry, ~100.80, 15M close below 101.00 after a wick above 101.16, stop loss, 101.55 take profit 1, 99.80 risk reward, 1:1.3 invalidation. Void if 15M candle body closes above 101.50 after that countertrend scalp. I want to take the pulse of this community. Are you scalping or swinging this week? Comment scalp or swing right now. I want to see where you sit as we pivot into the session swing. That feedback shapes the follow-up videos, so drop it now. Strategy 3, the session swing, is the trade that captures the multi-day move aligned with the 4-hour and daily trend. You do not chase here. You wait for the pullback that shakes out late longs. The plan is a buy-the-dip strategy, and the zone is critical. With price currently at $100.64, we anticipate a structural retest of the broken daily resistance turn support. That area sits between $98 and $98.50, which coincides with the prior psychological level and the rising 20-period MA on the 4-hour chart that is catching up fast. So here is the swing trade setup. Place a limit by order at $98.50. The trigger condition: we only want to buy this level if the 4-hour candle closes with a bullish rejection wick, or at least if price tags the zone and the hourly RSI resets near 50 without breaking the higher-low structure. If you are not watching screens all day, the limit order plus a protective stop is your friend. Your stop loss goes below the weekly structural support at $96.20, exactly our invalidation level. That's a stop of 230 ticks, which is wider than the scalps, but justified for a swing capturing geopolitical premium. Take profit 1 is set at $101, just below today's high, banking the first leg of the recovery. Take profit 2 stretches to $103.50, right at the upper end of the measured move target, aligning with the call wall and the supply shock forecast from major banks. The risk-reward from entry to TP1 is 1 to 1.2, modest, but to TP2 it's 1 to 2.6, giving you a strong swing ratio. Additionally, once price reaches halfway to TP1, around 99.75, we trail the stop to break even. This swing is invalidated if we get a daily close below 96.20. If that happens, the entire bullish structure collapses, and you cut the trade without hesitation. Here is the on-screen swing card, the session SWNG entry, 98.50, limit order, for H bullish rejection signal, stop loss, 96.20 take profit 1, 101.00 take profit 2, 103.50 risk reward, 1 minute and 2.6 seconds to TP2 invalidation, void if daily close below 96.20. Before we leave the setups, a rapid 30-second risk pulse because this is the non-negotiable foundation. Never risk more than 1 to 2% of your account per trade. On these scalps, keep your risk even tighter. The volatility is massive, with an ATR of $4.5. Stops are non-negotiable. There is no position worth a blown account. Absolutely no positions through the Core PCE release unless you are using a defined risk strategy you have tested. This is how you survive to trade the next explosive move, now close and retention loop. The single most critical level for the next session is 96.20. If Brent prints a daily close below that, the entire monthly trend flips from strong buy to a deep corrective phase, and I will have the updated blueprint for you exactly 24 hours from now. Tomorrow's video will focus on the PCE fallout and whether the Baker Hughes rig count signals a US supply response that could cool this spike. And here is your cliffhanger. If the dollar breaks above 102 on the DXY, the whole inflation oil feedback loop shifts, the bulls could get squeezed. Do not miss that analysis if you want the full breakdown on trading gold, the Aussie dollar, yen, euro, and Bitcoin alongside this oil move. Those videos are live right now. Tap the end screen that's appearing, and then hit the bell so tomorrow's alert lands before the market open, because in this environment, missing one session means missing a generational move. Hold the like button and subscribe. Every signal helps the algorithm bring you the levels that matter before the herd even sees them. Scalp the noise. Swing the trend. And I'll see you in the next one.